Good afternoon and welcome to Philanthropy Impact's Walk in My Shoes series, where we explore topics pertinent to you and your clients as they embark on their purpose-driven wealth strategies and donor journeys. My name is Sophie Sahanik. I'm the Director of Membership and Development here at Philanthropy Impact and the person to talk to if you'd like to know more about our training and how to make the most of your membership with us. I'll share my email in the chat or at the end of the session for those watching the recording. As always, we will keep this discussion really strictly to 30 minutes, so it will go very quickly. But we do encourage you to use the chat to introduce yourselves and have your say and pose questions to our panel. Please make sure to select everyone so that everyone can see and that you can get answers then. Hopefully we'll get a discussion going. Today's session is part of a group of sessions we're curating to bring you some technical insight into the mechanisms available for clients to start their philanthropic journeys or to adapt it as they need to. It is with great pleasure that we welcome three experts from a small selection of UK donor advised funds to discuss the benefits and efficacy of giving via this vehicle. Chairing this discussion is our very own CEO, John Pepin, and joining him, we welcome Anna Jossi, who's the CEO of Prism the Gift Fund, Mark Greer, who's the Managing Director of Philanthropy Services at Charities Aid Foundation, and John Kennedy, who's the CEO at National Philanthropic Trust UK. Thank you all for joining us, and I will now hand over to John for John to make a start. Thank you very much.
Thank you, Sophia. Anna, John, Mark, thank you very much for doing this. DAFs are growing, and there are at least 13 of them in the UK now. I'm going to just list them because I think it's important to be aware of all of them. So there's Seahorn Co-Master Charitable Trust, Prospero World, NPT, which is on here, Prism, which is on here, Founders Pledge, CAF, which is on here, UBS, Stewardship, Shared Impact, Charities Trust, UK Community Foundations, Casanova Capital, and Chapel in York. So it's a growing phenomenon and a popular one. So I thought I hope I didn't miss anyone. If I did miss someone, could you please send an email and let me know. You also have a chat down part of this. So if you have a question or a comment, please put it into the chat. Okay, so Mark, let's start with you. Could you tell us what is a DAF, how do they work, and are they growing, and how much are they growing?
Sure, thanks, John, and hello, everyone. So a donor advised fund is a vehicle that people can use for their philanthropy and their charitable giving. It's, in a sense, an alternative to setting up your own independent foundation. So what the client can do is, instead of setting up a foundation with the Charity Commission, going through the rigmarole of creating their own legal body, the governance requirements, the risk management, and all of the compliance that comes with running a charitable foundation. You set up a sub-fund with a provider of a DAF, which is a registered charity in the usual way, and it's a fund that's held separately within the accounts of that donor advised fund sponsor. Now, what that means is that that sponsor can create all sorts of economies of scale and can build out the expertise that are needed to do things like making charitable investments, making grants overseas, all the compliance requirements that come with running a charity, creating accounts, having them audited, reporting them to the Charity Commission, being audited by HMRC, claiming gift aid. All the rigmarole that comes with that is done by the DAF provider so that the client can focus on their charitable giving and doesn't need to become an expert in all the behind the scenes work, but can focus on the enjoyable aspects of charitable giving. You have other advantages like the fund can pass through the generations within a family. So what clients that want to create that kind of a philanthropic legacy and a culture within their family can do that in just the same way as creating an independent family foundation. So as you say, quite a lot of them in the UK these days, and they are growing at an annual growth rate of anything between 10 and 15%, and that's here in the UK. So increasingly popular. Increasingly, we're finding that professional advisors who used to recommend that their clients set up a charitable trust or a foundation themselves are sending clients to speak with donor advised funds and to explore whether that would be a cost-effective and a convenient alternative to having your own foundation. So in a nutshell, that's what they are, and the fact that they are very much growing here in the UK.
Okay, thank you, Mark. Anna, do you want to build on that and talk a bit some of the main users of DAFs? I would assume it depends on the DAF. And is it just cost savings that people are choosing DAFs over trust and foundations? How is it being used by individuals and families? And is it something for mass affluent?
So different DAFs have different markets. So some have an approach to target a mass market. Some, like Prism, our market is only the mid upper end of the market. I think the mass affluent, there is a move to also engage them and bring them in. And I think we'll see in the mass affluent sector a greater move with some of the DAFs to try and encourage more giving in that sector. As Mark said, it's an alternative to creating a grant-making foundation. And the reality is, given the rules and regulations of the Charity Commission, it's no longer easy to create my nice little charity on the side as a foundation or an operational charity. And therefore DAFs are growing because it's so hard to navigate it. And you need highly knowledgeable trustees. They need to be trained every year. You need policies in place such as safeguarding data protection, and it's a full-time job. So either that's something you're going to do yourself or you're going to have staff to do it. And today there is no number where it makes sense to create a grant-making foundation. There used to be sort of this magical number of, oh, well, if you've got 5 million, create your own grant-making foundation. That's gone. So I think we will all find that increasingly people have DAFs, they can appear like foundations, they're named, they're labeled, but they're an account at a DAF, and gives everyone the flexibility and the interest in working out their giving without worrying about governance, compliance, due diligence.
Picking up on both what you're saying, it's really interesting that we've just broken our records for the number of people joining the Walk in My Shoes in the last several months since the summer. So congratulations, well done, good topic. John, are there different models? Could you talk about the different models and comparing here with the US and potentially with other countries?
Sure. I think the fundamental model of how a donor advised fund works that Mark described and Anna expanded on is fundamentally the same around the world. So those of you on the call that are familiar with the American market, the DAF market has been around much longer in the US and has grown much faster starting in the 1990s. So they're a little bit ahead of the DAF curve of using DAF and awareness of DAFs. But the UK, I would mention, is quickly catching up in terms of both donors and philanthropists and also advisors becoming aware of the DAF model and how it's a great alternative to a grant-making charitable trust. And then further afield, those of you that do any work on the continent, there are DAFs in continental Europe. There are a few out in Asia. It's something we see increasing talking, or people talking about around expanding the DAF market. But the interesting thing from our perspective, we have donor advised funds here in the UK and also in the US, is really seeing the appetite picking up in the UK for donor advised funds, as Anna and Mark were mentioning, really because it's so cumbersome to set up your own structure. It's so convenient and effective to manage your philanthropy through a donor advised fund giving vehicle. And I might point out that London is a bit unique and the UK is a bit unique in that it is not only for British philanthropists, but it's also a hub, as you all know, for international families from around the world. London has long been that hub. And so we see international families using donor advised funds in London to carry out their global philanthropy, which is a great sort of point of optimism in the post-Brexit world, that is still a lure for international families to use the jurisdiction of the UK. So I see, in answer to your question, John, much more similarities. Of course, the models differ a tiny bit between countries. Of course, the tax incentives that people receive for donating or contributing assets into a donor advised fund are very different between countries. But the fundamental sort of lure of using a donor advised fund is the same in terms of convenience, ease of administration, staying in compliance with all of the rules without having to hire a team to do that yourself.
Has there been controversy in the US about donor advised funds? Has there been the same issues here?
The principal controversy in the US right now that's being debated in the press and in Congress is around the payout ratios of donor advised funds. So those of you that work in that market will be aware of the pending ACE legislation, ACE Act in the US. It's very complicated in what they're proposing, but the fundamental sort of gripe is that in the US, there is no payout ratio requirement for donor advised funds versus private foundations in the US have to give away 5% of their assets every year. We are quick to point out, and the legislature is learning, that donor advised funds grant out much more than 5%. The stat in the US is well over 20%. In the UK, the payout ratio is over 25%. I think it's around 28% right now. So they're really fantastic vehicles for people deploying capital. That debate is a very American debate. In the UK, we don't have such a thing as a payout requirement by a charity. You know, we have charities that have been around since the Middle Ages. It's fantastic. That specific debate that is happening in the US is not necessarily applicable in the UK, but you do see it in the press from time to time.
There's a lot of pressure going on now with the Charity Commission and others looking at charities with endowment funds of investing them in impact investing. And a number of us have been pushing for that to happen. There's a court case going on as well around that might help to determine what's going to happen. Anna, maybe you could talk a bit about this whole issue of investment. How does it work? So I create a fund, I put in 10 million, charity people get paid really well, so 10 million. And how does that get invested? How does that get distributed?
So again, it will slightly vary on different DAFs, but at Prism, it's very much donor-led and donor-suggested. So a donor puts in the 10 million and says, my personal wealth is looked after by a certain bank, and I would now like my donor advised fund, my account at Prism, to be asset managed there. So Prism or another DAF become a client of the asset manager. And that portfolio is then discussed with the donor, with the asset manager, and the donor may say, well, I'd like 60% in equities or whatever it is. And there could be more than one client with different asset managers, or a client may say, I really care about ESG, these are the principles, or actually, I like the concept of a social investment. So the beauty about a DAF is we're all basically agnostic. We are UK charities, and actually in reference, I can see in the chat, someone said, what's the difference between a DAF and a wealth manager? We're charities. That's what we are. That's how everyone, by the way, gets all the different tax reliefs, by making a gift irrevocable into a DAF. And you may benefit from gift aid, share relief around property. I mean, they're all different tax breaks. We'd need a session on that, and hopefully we can follow up at another point on the tax pieces. But wealth managers are wealth managers. They're investment managers, they're asset managers. So they do their job, and we provide the holding account to allow someone, A, to get the tax relief, B, to have a balance of funds invested, and then C, we do the compliance and governance on distributions out to charities all over the world, or not-for-profit, social enterprises, impact.
So I can have my wealth advisor help me manage my account there then?
Absolutely.
Okay.
Absolutely.
Mark, what about CAF? Is it the same thing working with CAF and CAF America and your other international partners?
Yeah, that's right. So what Anna just described, we will do with a range of wealth managers, which of course can create some really fruitful partnerships with those wealth managers. So from the perspective of that a professional advisor or a wealth manager, it helps them to offer philanthropic services to their clients without that necessarily being a separation of that relationship, or feeling as though that might be either money or relationships walking out of the door. So it's really, really helpful in terms of broadening out the offer that they have. The other thing that, of course, you can do in a DAF is they can operate a little bit like a self-invested pension plan, with the fundamental difference that the beneficial owner of the assets within the account is the DAF provider rather than the underlying client. But people within our DAFs, I can't speak for the entire market, but I would imagine most are the same as us. You can give us a list of individual stocks or individual funds to go directly into and manage a portfolio that way, if you don't necessarily feel that you need to be paying for a full discretionary arrangement with a wealth manager. So there's a huge amount of flexibility, everything from individual stock picking yourself right through to discretionary segregated portfolios with the leading wealth managers in the country. So the massive flexibility with investments. One thing, I suppose, related to investments that I often end up talking with clients about is people say, well, isn't using a DAF a bit of a loss of control? So, you know, if I had my own foundation, I'd be able to control the investments myself and all of that. And what I usually say to people is, completely understandable concern, but in many ways control is a bit of a myth or an illusion anyway, because any independent foundation is subject to Charity Commission rules and guidance on what charities can and can't invest in. It's subject to the same HMRC rules as DAFs are. And so people say, well, I'll lose control, but of course you don't have complete carte blanche to do what you want with charitable assets in any sort of a vehicle. And the advantage of the DAF is we've got those policies in place that make us definitely on the right side of those regulations. And again, the underlying client doesn't have to do that work, doesn't have to figure out those questions for themselves. And whilst it may be a bit of a perceived loss of control, it's really not much different to the constraints that anyone would have with an independent foundation anyway.
So there's we had quite a while ago, I don't have the name handy, of a DAF out of New York City that only does impact ESG investing. Nothing like that, from my understanding, exists in the UK. Is there a reason for that? Any one of you?
John, I'll pick up and just add a little perspective. The philanthropy market in the US is so large that you will find DAFs that are very specialized in the US. So you will find religious, and you have some of these in the UK, but you will find DAFs that are specifically focused on a region, a community foundation model. You will find DAFs that are specifically focused on one religion and giving within the tenets of that religion. And then you will have some that are focused on a type of investment, such as you're suggesting, the impact investing. So it doesn't surprise me that that exists in the US. It's a smaller market in the UK. We, like Mark and Anna, offer all types of investments to we're donor-led. So if they want to do impact investments, that's fantastic. If they want to do more traditional investments, that works well. So I don't have a precise answer to your question, other than it's such a large market over there. There are all types of DAFs that we don't necessarily see in the UK.
Does it not concern you as a charity, and this is an issue we're taking up with the Charity Commission, about the harm versus good argument? Where you have good in the sense that some of the people they're donating their money to different causes, and on the other hand, they may be investing in things that might be doing harm to the environment, et cetera, et cetera.
I mean, that is a complex issue, and obviously there are interesting cases out there, like the Sacklers, and charities will no longer take their funds or return funds. In fact, even more complex actually to return a donation once it's been made. There is a debate that, once you've made a gift to a charity, at least it's in charitable hands. I'm not necessarily talking about the source of funds here, which, we all have a duty to look at the source of funds, but they are, once we have it, it is going to be distributed appropriately and effectively. On the investment side, I think increasingly any asset managers that are on this call will also want to encourage anyone with charitable funds to invest it appropriately and thinking about ESG, and we'll see that increasingly more and more. So we can influence and we can guide and we can suggest, you know, actually it could be rejected also by the trustees and just say, look, this is just too inappropriate, too high risk, or you know, just not sufficiently following guidelines that we're comfortable with. I think we'll see an increasing move.
Okay, and then I think Mark, I'm not sure which was Mark or John, were saying that I think it was John about the 25% distribution. Has that been a big change since COVID came in?
I can say sorry, Mark, if you, from our perspective, that overall the grant payout ratio has been broadly stable. If you look underneath that, you'll see a bump up in COVID-related grants. But in general, people have stayed roughly the same, at least in the experience that we have. But Mark, you may have a different perspective.
Yeah, I think what we saw was in the early months of the pandemic, certainly when you compared the same month in 2019, there was a significant spike. But when you average that out over the kind of nearly 2 years now of the pandemic, a lot of that was, I think, planned giving that was brought forward a bit to help charities through that initial crisis, and that donors by and large are sticking with their previous averages, which makes sense, right? Because a DAF is a vehicle for long-term giving. It's what you would expect a family that has a donor advised fund with a long-term plan around their philanthropy to be doing. But we've certainly increased activity levels for sure.
Is there a growth in, to change the subject just like that, in white labeling? So that's where a company sets up a DAF, but in effect, an existing DAF manages the whole back office in a sense. Is that happening?
Yes, I mean, we're seeing a big increase in corporate DAFs as well, because a corporation, you know, they're in the business of doing whatever they do, you know, like a law firm or a commercial company. They just will not have the expertise and the time to navigate and create their own foundation, and they don't need to. They can white label. You know, DAFs are incredibly flexible, responsive machines to provide someone with what they need and to encourage their philanthropic journey so they really begin it. And just to add on to my point here, there's a question here about, can DAFs be helpful for a not-for-profit social enterprise that is struggling to get high net worth individual corporate donations because they're not registered as a charity? And the answer is yes. And the donor into the DAF is going to get tax relief coming in, and then we'll be able to give to an entity like that.
John, if I could add a little point of context, we partner with private banks and financial institutions. So we long have done that in the United States to offer white label DAFs for partner financial institutions. And we're starting to do that in the UK as well. Again, what Mark was describing, just trying to raise awareness of DAFs and putting them in more people's hands is good for the sector. And so that's an example of institutional partnerships to increase the availability of DAFs in the marketplace.
And when you do white labeling, what level of due diligence is done to ensure that, and is it public, your white labeling? So if I go into Bank X and you're doing the white labeling back office stuff, will I know that?
Yes, you will. It's fully disclosed. We're very transparent in the fact that we are a charity and a wealth manager is a wealth manager. Back to that line that Anna was differentiating. We don't manage assets, some wealth managers do. We are a charity and we administer donor advised funds. And so it's all very clear.
Okay. I know we only have about 7 minutes left. Are there any questions in there that you can see in the chat that we think we should start to address? Someone's mentioned about where they find it. On our new website, we will have a list of every DAF and their characteristics so that people will be able to know. Is there anything else in there that you can pick up on?
There's a bit of a theme about DAFs and charities. So there's a handful of questions there. So to speak to that a little bit, we do a lot of work with charities. Obviously, as CAF, we provide banking services for charities themselves and We make loans to charities and various grant making programs. And so we have a lot of relationships with charities as well. We do often get that question of, how do we as a charity get in front of the donors? And we do that at times. Often we'll run themed events for our donors around a particular cause area, and we'll bring in subject matter experts from the charity sector to present to clients. And I think really, my advice there is just to nurture those relationships. And often our donors do come to us and will say, I want to. This is sort of what I want to achieve in the world, but I don't know where to start. I don't know which charities to be supporting. I don't know who's good, who's bad, who's ineffective, who's effective. And so we can provide advisory services to our clients as well. And really, it's just a case of trying to stay close to the DAF provider and sharing. I always encourage people to share their materials with us so that our teams that are out there advising clients can be kept up to date about what's going on out there in the sector.
Okay, thank you. We run specialized training program for high value fundraisers, major donor fundraisers. And one of the questions that comes up is, okay, I can find out what a trust and foundation are doing. I can approach them and stuff. It has been difficult to approach donor advice funds. And what we're trying to do is to encourage high value fundraisers to in effect become trusted partners and supporters of advisors, and I assume also DAFs in supporting clients on their donor journeys. We've been building on what Mark was saying. Do you see a role that fundraisers can play to help your clients? So Mark's just described one aspect, but Anna and John, do you see a role for fundraisers, assuming that they're not going to come in and do pitches and stuff, but they're actually looking at relationship building? Let's assume that. But what role can they play?
Look, major donor fundraisers, I think in this country have a lot to learn, and it's great that you're offering that and servicing them. When you look at very large charities, sometimes it's only about 8% that is raised from major donors. So those people need to learn to really build relationships, pyramids with major donors who will then feed them the DAFs. They can come to us, they need to build that private client intermediary world of banks, DAFs, lawyers, but they ultimately need to work with the donors and build those relationships. Those are the people that they need to build the relationships with. Once they have those strong relationships, the donors will bring them into the DAFs. So I actually think that is their first port of call. And I always say to major donor fundraisers, there's no magic wand. It's hard graft. Go and build it. It will take years, but go and do it.
John.
Couldn't agree more with Anna. The relationship is with the donor themselves. When we work with fundraisers, major donor fundraisers, you can tell a big difference with those that understand how DAFs work. They have the donor relationship. And then, as Anna said, they're bringing the DAF because they're funding it instead of their private charitable trust. They're using a donor advised fund vehicle to fund the grant that they're talking to the charity about. And so it's really great and wonderful when you have a fundraiser who understands how DAFs fits into the ecosystem of philanthropy, rather than a fundraiser who comes to a DAF and says, please open your book and tell me all who your clients are so I can go hit them up for money. That's not a good approach, right? So those that are sophisticated and want to learn how DAFs help the system and how major donors use DAFs, those are the ones that are successful, in my opinion.
So the other way that they can do it is if they look at people who have given, and building on what you're saying, they could approach the DAF and also say, we understand person X is given. If you want further information to them, that's great. So it is coming in the same way you're both suggesting. We've only got one. Oh gosh, we only have 1 minute. I'm sorry. There's so much more I want to ask. I just want to start. We're going to, oh, Sophia, go away. She took control of the thing away from me at the beginning. It's not fair. Okay, so we're going to do this again a number of times. But can we just have final words of wisdom, 30 seconds about the topic? So Mark, would you like to start? 30 seconds.
Sure, yeah. So we see a lot of people, particularly from younger generations, starting to use DAFs. In the States, some of the biggest DAF providers are saying about 10% of their new accounts opened in the last couple of years have been opened by millennials. So this is not something that's just about people that are at a certain stage of life and have made their money and are seeing giving as part of their life at that point. This is something, a really great way to engage people who are interested in impact, a generation that's interested in improving the world, and DAFs are a very relevant vehicle for that.
Great, thank you. John.
Yes, I would just say philanthropy, in fact, fundamentally is a community of advisors, professional advisors. And I think it's remarkable the change we've seen in donor advised funds and how we can all work together to raise awareness of donor advised funds, much like what we've been discussing today, just so folks in the advisory community and then the clients that they work with understand how simple and effective donor advised funds are. They may or may not use them depending on if it's right for them, but just raising awareness is, I think, is our collective challenge. And one that we look forward to sort of helping everybody move forward.
Great, thank you. Anna.
Yeah, I just reiterate John's point. You know, we know they're growing in the UK. We're a number of years behind America, but you know, we're heading that way. And this community and the private client intermediary world, the more they learn, the more they feel comfortable opening up the philanthropy conversation with their clients and offering DAFs as a vehicle. I just hope then the more the sector will actually give, and one always gains more than one gives.
Great, thank you. What's one of the most valuable things about what you're doing and what the other DAF providers are doing is what we teach to wealth advisors, wealth management advisors in our training programs for them around impact investing. And that is, it's important to have conversations with clients about their values, their motivations, their ambitions, and their vision for the future, and then how they can live that out through their philanthropy and their impact investing. So thank you very much for that. It was great talking with you, and I'm sorry the 30 minutes went so quickly, but we'll be back again. Sophia.
Yeah, thanks everyone. That was a really great session, and there's clear interest in learning more about DAFs, and so we'll make sure we cover this thoroughly over the coming months. So I have two exciting things to announce right now for you all. So one is that today we are sending out a sneak peek preview for members of our issue 26 of our magazine, looking at sustainable impact, ESG investment and philanthropic giving. If you haven't received it, do let me know. It means that you're not quite on the mailing list, so making sure that you are. And secondly, we have our first hour-long virtual event of the year this week on the 20th of Jan, I think that's right, sorry, I'm doing this from memory, where we're talking about meeting the needs of the next generation of client. It's going to be an amazing discussion. We did a walk in my shoes about it recently, and it was just brilliant. So please do come to that one. Register with Raquel. Thanks so much for joining everyone today, and so sorry that we ran over. It just goes to show how brilliant this session's been. Thank you very much, and have a great week.
Thank
Bye.
you. Thank you. Bye.